Hello everyone and welcome to the part one of our beginner webinar series. My name is Cesar Pires and I'm your speaker for today. We are very happy to have you here as you take your first steps into this fascinating field. Our goal today is simple: to demystify trading and give you a solid and clear foundation of the core concepts. Also, we've saved some time at the end for a live Q&A, so if anything pops into your head as we go, whether it's a clarification, a what-if scenario, or even something that seems obvious, drop it in the chat. No question is too basic. We are here to build understanding together. So, what exactly we will be covering today? We'll start by defining what financial trading actually is, and just as importantly, what it isn't. We'll take a quick tour of the main markets you can trade, from stocks to crypto. We'll explain one of the most fundamental concepts: the difference between going long and going short. And finally, we'll introduce the essential tools you need: brokers and trading platforms. By the end, you'll have a clear mental map of the trading landscape. Let's start by busting a common myth. When many people think of trading, they picture a high-stakes casino. They think it's all about gut feeling, luck, and rolling the dice. In gambling, the odds are inherently stacked against you. It's a zero-sum game based purely on chance. But trading is something entirely different. Trading is not a gamble, it's a skill. It's a profession and a discipline, much like playing chess or learning a musical instrument. Successful trading is built on a foundation of three key pillars: the analysis, learning how to read the markets; the strategy, having a clear plan for your trades; and perhaps most critically, the risk management, knowing how to protect your capital. This isn't about getting lucky. It's about getting educated. Now, let's talk about where the action happens: the financial markets. The most well-known is probably the stock market. When you trade stocks, you are buying and selling shares or small pieces of publicly traded companies. For example, if you believe Tesla is going to have a great year, you might buy a share of Tesla, effectively owning a tiny piece of that company. Next up is the Forex market, which is short for foreign exchange. This is the largest financial market in the world. Here, you're trading currency pairs. You are essentially betting on the value of one currency relative to another. A common example is the euro and US dollar. If you buy it, you're expecting the euro to strengthen against the US dollar. If you don't want to pick individual stocks, you can trade indices, an index that measures the performance of a whole basket of stocks. The SP 500, for instance, it tracks 500 of the largest companies in America. So instead of betting on just Apple or Amazon, you're trading on the overall health of the US tech sector or the entire economy. And finally, we have the exciting and volatile world of cryptocurrencies. This involves trading digital assets like Bitcoin and Ethereum. These are the centralized currencies that operate on blockchain technology, and they represent a brand new asset class for traders. Now, one of the most important concepts you'll ever learn. How do you actually make money? The first way is straightforward. It's called going long or simply buying. When you buy an asset, it's because you believe its price is going to rise. The age-old mantra here is buy low, sell high. That's the goal of a long trade. But if you think a company is about to have a bad quarter or a currency is going to lose value, what do? In the traditional world, you just stay away. But in trading, you can still profit through a concept called going short or selling. You sell an asset you don't yet own, expecting to buy it back later at a lower price. The process is sell high, buy low. This is a powerful tool that allows you to find opportunities even in falling markets. In trading, the goal is to buy low and sell high, maximizing profits through strategy decisions. To succeed in trading, remember to sell high and buy low, anticipating market shifts effectively. Okay, so you're excited to start, but how do you actually access these markets? For that, you need a broker. Think of your broker as a bridge. You, as an individual trader, you can directly shut out orders on the stock exchange floor. A regulated broker acts as your intermediary, and they provide you with the access and leverage to place your trades in the global markets. And how you interact with your broker and the markets. You do that through a trading platform. This is the software on your computer, your phone, or tablet. It's like your command center. It's where you look at the charts, perform your analysis, place your buy and sell orders, and manage your open positions. Platforms like MetaTrader are industry standards, and we're gonna explore them in future webinars. So let's do a quick recap of what you've learned today. 1. Trading is a skill you can develop, not a lottery ticket. 2. You can trade in several major markets, including stocks, forex, indices, and crypto. 3. You can profit from prices moving up by going long and from prices moving down by going short. And 4. To do any of this, you need a broker and a trading platform. This is just the beginning of your journey. In our next webinar, part 2, we'll dive into introduction to market analysis, where we'll explore how traders actually read the markets and make their decisions. Now, let's see if you have any questions. Few questions here. Let's go to the first one. Hi, thanks for the info. I'm really worried about the risk part. You mentioned trading is a skill, not a gamble. If I'm successful, how do I actually stop myself from just blowing up my account if a trade goes badly? What's the key difference between trading professionally and just crossing my fingers? Well, my friend, that's a fantastic and crucial question. The difference comes down entirely to the third pillar we discussed, risk management. In gambling, you rely on luck. In professional trading, you have a clear plan for every single trade before you enter it. And this plan includes exactly how much you are willing to lose if the market moves against you. We're talking about precise tools and techniques, not gut feelings. It's about protecting your capital so you can trade again tomorrow, even if the trade today fails. Getting educated is the only way to swap that crossing your fingers feeling for control. Another question? Okay, I get the difference between going long, buying low, and selling high, and going short. But why would anyone even want to go short? It seems complicated and counterintuitive to sell something you don't have. Why not just wait for prices to go back up? That's perfectly natural to wonder. The main reason is opportunity. If a stock market or a currency is clearly having a bad run, prices might fall for weeks or even months. If you only go long, you have to sit on the sidelines and wait. By being able to go short, you can find profit opportunities in those falling markets. It's an essential tool that allows you to participate and potentially profit, regardless of whether the overall economy is going up or down. Third, you showed us four different markets, stocks, forex, indices, and crypto. Which of those four is the easiest or the simplest one to trade when I'm just starting out and trying to practice the basics? There isn't a single easiest market, as they all have different characteristics. Stocks are often the most familiar because you understand the companies behind them, like Tesla or Apple. However, the forex market can be easier to access and has high liquidity. My advice as a beginner is to start with the market you feel you can analyze most easily. Crucially, start with a demo account, a practice account on your trading platform, and then explore all of them because for you to find out where you stand and explore all of them before committing any real capital. The simplest market is the one you'll take the time to learn. Thank you very much for your time and attention. And remember, we are here to support you learning every step of the way. See you next time. Have a good one. Bye.